whole process seems so overwhelming. And one thing I know for sure is true. Some mortgage companies work pretty hard to complicate the decision to a point where it can be hard to decide what the best option is for you. What should you do about that? I'm Elise Glenk, and here's today's Real Estate Minute. Let's start with the single most important idea. There are two basic categories of mortgages: fixed rate mortgages and adjustable rate mortgages. A fixed rate mortgage gives you a predictable monthly payment. Regardless of whether the housing market or interest rates change, the interest rate on the loan and your repayments are going to stay the same for the entire loan term. People who choose this option usually plan to stay in their home for several years or throughout much of the term of the loan. Now, with interest rates at near historic lows, this option makes so much sense for so many home buyers, especially those who might wind up renting their properties down the line. An adjustable rate mortgage, also known as an ARM, can offer lower interest rates and payments, at least initially. But here the interest rate can float up or down after the initial fixed interest rate period expires, which is typically 1, 3, 5, 7, or 10 years. Now, borrowers who choose an ARM generally intend to sell or refinance their mortgage before any interest adjustments kick in, which is great. Both fixed and adjustable rate mortgages, though, can vary in length. The longest term available right now is a 30-year mortgage. They've X'd out the 40 years for the moment. 30-year mortgages offer the lowest monthly payments because it spreads out the cost of the loan over a longer time frame. However, you're paying the most amount of interest because you are paying it over, say, 30 years. With a 15-year term, your monthly payments will be considerably higher for the same loan because you're paying back the balance, the amount you're borrowing, in half the time. But over the long run, it's often a much cheaper option because you're saving those 15 years of payments, and that adds up to real money. So consider a shorter term loan if you can afford the higher monthly payment. Now, with interest rates at or near historic lows, for however long that lasts, some borrowers have actually opted for 10-year loans. These are typically fixed rate loans that allow you to pay off your entire mortgage in just a decade, which is amazing. The savings is incredible because the interest rate on the loan is at rock bottom, and so you end up paying almost no interest. You just are repaying the loan very, very quickly. What's right for you? Talk to your agent and a few different lenders and maybe even your tax preparer. Tell them your budget, your approximate credit score, how long you plan to stay in the home, and your comfort level with different monthly costs. And they're going to help to work to make you an educated decision maker. I'm Elise Glenk. For more details and links, visit my website, where I'm working to rebuild America one house at a time.